Good morning. It's 9 a.m. here in Hong Kong, up in Beijing, and also in Shanghai. Welcome to Bloomberg Markets China Open. I'm David Ingles with Yvonne Man.
Our top stories this morning: gains in Asian stocks, but U.S. futures in the red on disappointing earnings that we got from the tech giants there, Microsoft, Google parent Alphabet, the like. Chinese ADRs rally, though, but global investors say they are frustrated and angry with President Xi's tighter grip on power. And chipmaker SK Hynix cuts 2023 capex by half after reporting a 60% plunge in third quarter profits. We're watching the chip players, the tech space certainly under pressure here today, Dave. But then again, we had the panic selling in China on Monday. Things were a little bit less bad yesterday, but now you have this line that we heard from the PBOC, the FX regulator talking about the renminbi stable and maybe talking about healthy stock and bond markets as well. Hopefully that helps things. Yeah, well, longer term fundamentals is what they're pointing to, and the PBOC, I think, also adding to the fact that when you look at the growth rate, for example, and potential growth, that's still very much intact when the economy, as it pertains to the economy. Now, that takes us into the earnings story, right? So as Yvonne is pointing out, when you look at NASDAQ futures, that's also an Alphabet story for one, that's a Microsoft story. When you look at A50 futures in China, and certainly the misses that we got from the likes of Chalco and Baosteel yesterday, and a lot of consumer names are coming out with earnings today, which we'll get to in just a moment here. We're up for a second day on the Asian benchmark, as you can see. We talked about SK Hynix, 1.6% to the upside there, so big drop in what they plan to spend there. Straits Times Index coming online, 0.4%. Let's flip the boards, please. Have a look at FX markets. In fact, on the slowdown story, just to mention too, Hong Kong exports are actually down for a fifth straight month. Dollar China up 0.3%, 734. We get the fix in about 12 minutes from now, roughly speaking. Sterling, and we're coming off, by the way, on euro after we climbed to about a 3-week high on that one. Quick glance at treasuries. We're down for a second day as far as yields go, 2, 5, 10, and then 30. And roughly at about this time next week, of course, it's a Fed meeting, but we can talk about that next time. There's always time to talk about the Fed anyway. Fun. Somehow it makes its way every day, right? Yes. Into the conversation. Let's bring in our guest now, MLI strategist Mark Cranfield, also our chief China markets correspondent Sophia Horty-Costa, to walk us through the price action, these markets. Mark, I'll start with you. With dollar renminbi, has the playbook from the PBOC changed this week, you think?
Yeah, I think it probably has in a subtle way. I think they're more or less saying that they don't really want to fight the market too much. They fear the US dollar is extremely strong. They're willing to allow the dollar renminbi rate to move more in line with the general trend in foreign exchange markets. And they still have their daily parameter, 2% move above the fixing level. But beyond that, they're going to let the markets move the currency around a bit more. They may have a get-out-of-jail-free card because the US Treasury yields are starting to come down a bit, and that's taking the edge off the US dollar. So if the US dollar is beginning to soften a bit anyway, that will certainly take a lot of the pressure off the dollar-yuan exchange rate. What you will see in other ways is that the yuan basket will weaken a bit because the euro will get stronger, the pound will get stronger, and other currencies would improve within the G10 complex. So maybe China is going to get its cake and eat it. It's going to allow more freedom for dollar yuan, but at the same time, the yuan basket actually softens a bit as well. So in the end, you don't get the super high levels. Dollar yuan might not go to 750, it might stay contained, and yet they get the benefit of a weaker currency against the euro and the pound and other currencies as well.
Which are some of their biggest trading partners. We should note that too, Mark. Sophia, let me bring you in. Your thoughts on the yuan right now?
Well, actually, 750. I think it was Citigroup that is now recommending that trade. So they're saying basically go outright short the yuan right now because the path to further weakness is essentially wide open. I mean, we're past the Party Congress. It's no longer about maintaining stability in markets, but as Mark said, allowing markets to do their thing. And China may get a reprieve from the US if the dollar does start reversing. And that's kind of what happened in 2020 when we did have the weak yuan immediately after kind of the Wuhan lockdown, and then it reversed because of the dollar. So China kind of tends to have a little bit more breathing space when the dollar moves. But
those statements that we heard from the PBOC, the FX regulators, about healthy development of stock and bond markets. I know that was not in reaction to the market sell-off, but it did come after the Party Congress as well. What can we glean from these messages?
I think it really sets the scene for how capital markets will be in this kind of new China. And these 5 words, Yvonne: regulated, transparent, open, robust, and resilient. For me, it's quite telling that the first word there is regulated. Make sure it's not disorderly capital accumulation, the accumulation of wealth. Again, that's Xi's, very much under Xi's common prosperity umbrella. Transparent, that's the key thing. That's been the very important issue in the past 2 years, and a very difficult market to navigate for foreign investors because the communication, transparency is not there. And open, a big question this week has been, is China still looking to open up capital markets? Are foreign investors still welcome? Does Xi Jinping care about foreign investors? I mean, Shuli had a great column this week about that exactly. Is China still part of the global financial system? And that word suggests that the priority is still very much there.
Yeah, and the need for some, even the most gentle of gestures might actually turn market sentiment here. Mark, let me bring you in when you talk about the equity market. I think it was Bank of America that came out with a note, I think it was yesterday, talking about how the rout on Monday flushed out a lot of put options, and that actually exacerbated the volatility. But they're saying most of that is now behind us. Can we expect smooth sailing, at least over the next few days here in Chinese equity markets?
Oh, well, the great thing about equity traders is they're eternally optimistic. So there's always someone looking for a big rebound in the equity market. But if you look at what's happened this year, we saw the 8-share market made about a 28% rebound when it got close to the 6,000 line. 8 shares got pretty close to 5,000 this week. Maybe it's time for a decent rebound again. And even within the context of a very big bear market, you can have very substantial rebounds, which is a chance for people to make some pretty fast money. The 28% rise in the 8 shares, it took less than 3 weeks for that to happen. So if people suddenly think that the worst for the short term is over in China markets and they start buying, they might see quite a decent rebound over the next few days or a couple of weeks.
And we're taking a look at how, U.S. futures are deep in the red here right now, Mark. After we saw these tech, earnings that came out, you're really starting to see that strong dollar bite into earnings. And this is going to be, does this bode well for the earnings season anyway?
I mean, it's obviously the big tech stocks in the US, they carry so much weight, not just in absolute market cap terms, but psychologically as well. So much of what happens in the US markets is driven by how people feel about the big names like Apple, Microsoft, Alphabet. These kind of people, if they feel good about them, it's positive for the market. And when they change, that also is a big dampener as well. So certainly it's going to take a lot of the steam out of it. We really only get the full picture when the US cash markets open later on Wednesday. But certainly if you've got these major companies already complaining about the strength of the US dollar, that means that other people are going to suffer as well. Now, in the past, sometimes these companies have gone to the White House and they've said, look, we can't handle this any further. We need you to help us out. And maybe that will push Janet Yellen into finally saying that the US dollar has risen enough. Janet Yellen has been very quiet so far. She hasn't said anything on behalf of the US Treasury about the strong dollar. If the American companies persuade her that the dollar is too strong, that is a significant turning point for financial markets across the board, not just for the currency market. We haven't got there yet, but clearly the dollar has become a problem for a lot of people.
Speaking of earnings, Sophia, I'll end with you. There's a lot of earnings coming through this week out of greater Chinese markets, and certainly with a slowing economy, valuations are no longer frothy, as they like to say. I mean, would that be enough to put a floor underneath these markets?
I mean, valuations haven't been frothy for a very long time. I just wanted to say the word frothy there. The HSCI is trading at 6.6 for forward earnings. I mean, that's incredibly cheap. In a normal cycle, in a normal functioning market where people actually trade on fundamentals, then yes, a better picture on the earnings front would be something, at least some kind of data to show us how China Inc. is doing. You know, remember the GDP print in the middle of all that noise, a very confusing Monday, was actually better than expected. Yeah. So we do have some growth on the ground. We do have some recovery, and a better picture for Chinese earnings would kind of reinforce that. The key question is, will markets trade on that? Because right now they're trading on feeling.
Yeah. And the fact that we're at 6.5 times earnings tells you it's a weird time,
it's
right?
Right.
Like, we're not trading at fundamentals. Sophia Horta-Acosta there, and Mark Cranfield joining us live out of Singapore. Let's get it over now to Vonnie Quinn. She is in New York. She has your first word news. Vonnie.
David, thank you and good morning. China's central bank and foreign exchange regulator have vowed to maintain the healthy development of the country's stock and bond markets. They've also reiterated that the yuan would be basically stable. These comments, though, were made at meetings held right after the Communist Party Congress, rather than in reaction to this week's slumps in China's financial markets. UK Prime Minister Rishi Sunak has reappointed Jeremy Hunt as Chancellor of the Exchequer as he assembles a ministerial team to tackle what he calls the profound economic crisis facing the UK. Sunak has to strike a balance between rewarding loyalists and ensuring party unity. Suella Braverman is back as Home Secretary, just days after Liz Truss fired her over a national security breach. Bloomberg has been told that Elon Musk has pledged to close the acquisition of Twitter by Friday in a video conference call with bankers. Sources say the lenders providing $13 billion of debt financing have finished putting together the final credit agreement and are in the process of signing documentation. The move marks one of the last steps before actually sending the cash to Musk. Global news. 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Yvonne.
Well, still ahead, the CEO of Ayala Corp's power business shares with us the prospects for renewable energy in Southeast Asia and his firm's plans to reach zero emissions by 2050.
Yep, we'll talk to him before that, though. Coming up here, Fidelity International Investment Director Catherine Young comes on explaining why she sees a bit of a buyer strike in Chinese markets and where the opportunities might lie at this point in time. Just, 19 minutes away, 18 minutes away from the opening bell, Shanghai, Shenzhen, and here in Hong Kong. Stay tuned for everything coming up on the show. This is Bloomberg Markets China Open.
Season is here.
The backdrop is not looking too good.
I've seen the earnings bar being lower.
Bloomberg breaks the numbers first.
Profit likely more than double.
An outlier.
Record profit and sales volumes.
Bigger than expected, stronger than expected.
Certainly one to watch here.
With exclusive expert analysis.
Plenty of anxiety not far under the surface.
There could be much more significant upside.
How are you adjusting to this inflation environment?
Are there any market bets that you could make there?
At what point is this actually a screaming buy?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Okay, welcome back to the China Show. We're talking Japan now. The BOJ's out. They're buying more bonds than planned at the regular operation today. This is really thickens the plot ahead of the BOJ meeting in about 2 days or so. Yields are down a little bit on the 10-year here.
Yeah, certainly is going to make a very interesting meeting there. Is it really going to be leaning a little bit more hawkish or less dovish? We'll see. But take a look when it comes to renminbi fixture today. It's going to be very telling kind of where this means, given what we've seen with the dollar-China trade here, 716.38. So this is also yet a stronger fix. But yes, another, I guess you could say, one that was weaker. And
yeah.
It's way above what we've been seeing, which was frozen at 711. Now we're at 716.38. They've been talking about a renminbi that's stable. Yeah, we're starting to see kind of a bit of pressure, not just against the dollar, but also against the basket, too. Now.
Yeah, it's been weakening against the latter. And as Mark Cranfield was pointing out earlier, right, with yields falling, it might take some of the sting out. And they might actually allow the dollar exchange rate to move a little bit higher, which we have been seeing. Anyway, we'll leave that there for now. I mean, 716.38 is very close to yesterday's reference rate, which was at 68. So I think just 30 pips. So we could be frozen at that. Who knows? There we go. 733 right now is the exchange rate. Let's talk markets now. Still, Chinese markets.
Right. Let's bring in Catherine Young, Fidelity International's investment director. Yeah, how's this week been? Can you, I mean...
How are you?
How are you? It looks like we saw the capitulation on Monday. Do you see a turning point from here?
It feels like it. I mean, it was definitely somewhat of a buyer's strike on Monday. A lot of concerns. But then when you look at just the economic side of China and the valuation argument, it's still very attractive, right, in terms of opportunities. I mean, the internet sector itself and some of those large internet names can be classified as value these days. And I think that dividend yield story is still very, very important. It goes unnoticed when it comes to what companies are doing in terms of the payouts and rewarding minority shareholders.
Well, is it time to buy? Is it safe to buy? Is the other question? Do you get that question?
Well, the risk premium is more than likely to continue to rise or has risen. But in terms of, again, if we look just at the economics of China, given that the world we live in today and all the policy movements we're seeing elsewhere around the world, China really is at the other end of the spectrum. So they have the flexibility to ease and the tool set. And you're probably going to see some further fiscal supportive measures being announced in 2023 and more economic policy being announced in the Working Committee, the two-party meeting. And that's probably going to provide further clarity. But it's again, the sort of treading water. And, we might have seen some part of the foreign investment community just saying, given everything that's happened and the uncertainty and opaqueness, we're just going to bow out for the time being.
How do you look at themes like common prosperity and dual circulation? Because I think the kind of narrative coming out of the party Congress is that those things are staying put. So is COVID-0. Can you still make logical sort of investment strategies around sort of these themes still?
You can, and the policies that aren't new. We've been talking about these policies or hearing about these policies for quite some time. The market somewhat ignored, though, some of the economic pro-growth policies that were announced. So this continuation of high-end manufacturing, really that push towards R&D in terms of the healthcare, providing better healthcare, which is also part of common prosperity. So it seemed that the market movements we did see on Monday were a little bit of panic selling, as I said, that buyer's strike, and a little bit overdone in terms of what we did see. Interestingly, though, the domestic flows were still okay.
Mm-hmm. How are you approaching just the fundamental story, since we're talking about valuations, right? So we're getting into the thick of earnings season in the U.S. We're getting some numbers coming through out of SK Hynix, for example, which is a chip story, obviously. Some numbers out of China. And most seem to be pointing to further revisions forward, because we are getting the slowdown showing up in earnings.
Yeah, and China, again, is probably one cycle ahead, even when we look at the earnings story, not just the monetary policy cycle. And so we've seen a number of deratings over the past 1 or 2 years when it comes to earnings. Now, I'm not saying all earnings are really rosy in China, but again, there are so many pockets of opportunities. And I think, again, one side of the China story has sort of taken precedence over the other in terms of the ignoring of fundamentals and the valuation story.
Do you think this is just indiscriminate selling that we're seeing? You talk about tech, property, certainly we're seeing most of the pressure, but banks actually did a little bit better. Yeah. Why is that?
Well, again, if you were really concerned about what's going on in China, you would have seen the banks really sell off. So it was those well-loved names. And on Monday, 80% of the flows we did see, or outflows, were foreign investors. So those names that were held, so the big proxies of China, were the ones that sold off. And, again, when you look at some of those names, like some of the internet names, but from an EV basis, they look cheaper than some of the big energy-related names. So, again, it's about whether you can see that earnings visibility, whether you can see that market share of the various companies continue to grow or remain relatively robust. And those recovery plays, I mean, we could see, again, tweaks to the COVID policy. It's not going to be a 180-degree turn. Already yesterday, there was commentary about, business travel into China. So probably tweaks around the margin. And then again, these recovery names could actually, seem profitable or reward shareholders going into 2023.
So still defensive, still income-based strategies make the most sense, is what I'm getting from what you're saying?
Yeah, and also that domestic investor base. We talk about the Chinese consumer and the rise of the consumer, and household assets, by the way, attractive. The savings rate's over 30%. So it's not that Chinese households don't have the money to spend. They're just probably, cautious given sentiment. But that domestic investor story, that's really, really key, because the development of capital markets, especially with the property situation, is going to be key for growth going forward. Important for foreign investors, but also very important for the domestic domestic investors.
All right, Catherine, we'll have more from you. Fidelity International. There's some stocks to watch at the open. Big tech very much in focus, given what we saw the earnings after hours from Microsoft, Google, Alphabet, I should say, and then also SK Hynix dropping that bomb, talking about how they're cutting their capital spending in half. So it doesn't bode well for Alibaba. We're seeing that already in the pre-market, down close to 3%. We're also watching chip makers like SMIC. AAC Tech is actually up some 2%, but Hua Hong Semi, a little bit of pressure here today. And we're watching very much all things kind of earnings, right?
Yep.
So we had HSBC yesterday, that big news about the CFO stepping down. You have Stand Chart coming out a little bit later on, plus a whole list of it. We'll run you through it coming up next. This is Bloomberg. All right, A50 futures slightly lower here this morning. A quick check the latest business flash headlines. SK Hynix will cut its capital expenditure for next year by half, saying the semiconductor industry is facing an unprecedented deterioration of market conditions. The South Korean chipmaker reported a 60% decline in third quarter profit as shipments of PCs and smartphones decreased. Global chip demand has cooled dramatically in recent months due to soaring inflation and interest rate hikes. Microsoft shares slumped in late trade after its weakest quarterly revenue growth in 5 years. Sales were throttled by the surging dollar and a drop in sales of Windows software to PC makers. Excluding the dollar impact, sales for its Azure cloud services rose 42%, also below expectations. Alphabet's revenue and earnings fell short of expectations, too, as Google's search business began to show signs of weakness. The Google parent reported third quarter sales at about $57 billion, missing analyst projections of $58 billion. Net income was $1.06 per share. That's less than Wall Street's estimates of $1.25.
All right, just minutes away from the open of trade, and let's stay on the earnings theme here. So we have a lot of big earnings coming through, and here's really the macro and into the micro story. Slowing economy, slowing earnings. White bar is the forecast on the economy. Yellow line is the forecast on EPS, or the other way around. But in any case, they're both going the same direction.
Take out the countdown clock. We can't see where it's going.
3.3%. There we go. Bottom right is where they're headed. And this takes us into this whole list of earnings coming through today.
Oh, gosh, yeah. It's a lot, right? We got to do multiple kind of full-screen graphics for the Tsingtao Brewery, Budweiser, APAC, Ping An Insurance. You have some of these automakers like BAIC. We talked about Stand Chart after HSBC. So it's going to be a very, very busy few days here as well. In terms of analyst actions, we're looking at some of the banks as well.
Yep.
That was an interesting call that we got this morning. Guys, if we could flip the boards and show us analyst actions there. That's what CGS, CIMB, basically slashing a lot of these price targets for the China banks there. ICBC is one of them, cut to a hole with a price target of 360. China Tourism Group, that was rated a new buy at CITIC Securities as well. And China Coal, A shares raised to outperform at Credit Suisse. We're watching a lot of these resource-related stocks today as well.
Yeah, because of Chalco and Baosteel missing estimates there, so resources will be very much in focus. So the ones that reported earnings and the one, of course, as proxies to those other names. Chip stocks, we talked about SK Hynix, their implied vol. We can talk about a little bit more about this later. So that note out of Bank of America yesterday talking about how the flush that happened on Monday might roughly be over in terms of short-term vol. So watch it closely. Volumes have been extremely heavy these last 2 days. So we get that further today. And there's an aviation sector briefing top of the next hour. So what are they going to say? Well, I don't know. Wait for that. That's going to come up in about 30 minutes from now. We're here to tell you what's coming up. Also coming up here is the open and taking place against the backdrop of Asian equities up for a second day. Do we get that filter through into these equity markets? We'll find out in 4 minutes. This is Bloomberg. Good Wednesday morning. All right, just a couple of things to get through as we approach the open. So the BOJ out about 15 minutes ago. They're buying more bonds than planned. It's a regular operation, so that's point number one. Point number two, in terms of also central bank operations here, the PBOC injecting a net 280 billion roughly renminbi open market operations. 40th straight day also of a stronger than expected yuan fixing there, Yvonne, as far as the currency is concerned.
Stronger for a 40th day,
yeah.
That is, but then you've seen it 716 around that level for 2 straight days now. So maybe more signs are letting it go a little bit more further here. But we've been talking about with Mark Cranfield. We might not hit that 750 level, though, just given what we're leading up to the Fed and all that. So certainly there is a lot of market sentiment there in terms of the negativity. It seems like it continues here today, albeit, though, not as bad as what we saw on Monday, right? So Shanghai looking a little bit better here. Slow start, but we're up about a fifth of 1% for your CSI 300. Shanghai comp as well is pretty much flat here this morning. You're still seeing MSCI China down about 0.8%. We talked about the earnings picture a lot. That's to unpack here in the next few days here, whether it's from the resources side, the banks. We got the automakers as well. They're all reporting later on here today. Offshore renminbi, so 732. Onshore is at 726.86. Keep in mind, we did punch that 730 yesterday on the onshore rate, so we're slightly off that here right now. But we are starting to see, take a look at that euro yen as well. Euro yen, I should say, 1% pop here. So you are starting to see the renminbi weaken, not just against the dollar, but also against the basket as well. When it comes to yen, also seeing a similar picture there as well. Here we go. That was dated here. We're seeing a little bit more of that red against the euro again over the renminbi. But here's how the Hang Seng is faring. 8 shares. We're slightly lower here, but we're slightly elevated around 5,100, though. So we're still hovering around that 5,000 level. Volatility is coming down a bit. HS Tech, though, still in the red. We've been talking about the tech side of things after we saw with Microsoft, with Alphabet, Texas Instruments not giving good outlook, SK Hynix as well. We talked about the resource makers, so Chalco and Bao Steel. Big misses on their earnings for the third quarter as well. We're watching the chip makers with the SK Hynix story. Pretty mixed picture so far, but Hua Hong Semi seeing a bit of a pop here, up some 1%. And we're watching the banks very closely. We talked about that slashing of price targets here when it comes to CIGS. HSBC, we saw that 5% drop yesterday with the CFO stepping down. A lot of questions about their two key markets, right? The UK as well as Hong Kong. Stand charts up next. 3% pop here at the open. ICBC, though, lower by about 0.8%, Dave.
Yep, stand chart should be out. If HSBC is any guide, should be out in about 2.5 hours from now. Let's stick with earnings here. Also coming through today was SK Hynix, and really not so much the results, but their guidance on their plans on chip spending. And I think it's cut by almost half or over half on the back of what they see is just this collapse in demand. SK Hynix 1% up. TSMC, let's throw that in there. And you have these two markets, Taiwan and Korea, also coming up. As you can see there, we're about 30 minutes into the Taiwan session. Still with us is Fidelity International Investment Director Catherine Young. Let's talk about Taiwan. Let's talk about Korea. What are your thoughts on these markets?
So they're interesting markets. So if we look at EPS in Taiwan to start off with, over the past 2.5 years, you've seen it double. The previous decade, you saw no growth. And that was really driven by the
one company.
The supply-demand situation as a result of the pandemic. But now that whole supply-demand situation has changed, so you could see a reversal. But valuations are very, very cheap. So, potentially some nibbling in that area.
Okay.
Korea. So Korea's economically done incredibly well. And if we look at the KOSPI in terms of the past 33 years, it hasn't really returned anything to shareholders despite the economic developments, probably a result of capital misallocation, concerns around governance. But now when you look at where Korean valuations are, historically in these kind of post-crisis levels or moments, Korea does incredibly well over the next 1 to 2 years. So again, some interesting opportunities, but very mindful about the fundamentals and, for example, in Korea, the governance and whether, for example, how low can that E go when we look at it from a Taiwanese perspective.
When can I expect the tech cycle to bottom, though? When I have, the U.S. is slashing these curbs on chips and it's kind of roiling kind of the whole supply chain, even when it comes to human capital, the like. Does that just push back that kind of story of when the tech cycle bottoms?
Yeah, tech's going to be interesting, and obviously it's not just semis that we look at. It's all kinds of hardware. It's the internet names as well. But again, when we look at even if you look at China and the ramping up of their semis industry, it's been really, really quick. The pace at which they've come to market in terms of manufacturing, but those certain Korean and Taiwanese names, they still have the pricing power in this kind of market, so are likely to really benefit despite where we are in the cycle.
Well, I was about to ask you too, on Korea and Taiwan on that story, those are cyclical markets too, and we are headed into a slowdown.
Yeah, but when you look at valuations, they're incredibly
So it's price.
attractive. It's price, but also being contrarian in these kind of markets, I think makes sense. I mean, India's so expensive at the moment, trading, what is it, 35, 30 times. And so you're probably going to see a rotation out of India, maybe into North Asian markets because of the valuation story.
And Japan, it's been kind of overlooked for a decade. You're saying looking a little bit more interesting now to you?
It's been completely ignored. So like for like with performance over the past decade, it's nearly on par with the US, but no one's been looking at it because it's just sort of forgotten about. The aging demographics haven't been as much as an issue as what a lot of investors or commentators were expecting. And when you look at the turnaround in corporate governance there, and also Chinese corporate governance is really improving in terms of rewarding minority shareholders. That's a real plus for Japan. And then, for example, when we look at tech penetration, it's so low, so its trajectory is really attractive. So in general, Japan, again, from a North Asian perspective, a broad Asia Pacific perspective, looks very attractive, especially some of the smaller companies as well.
How much of the collapse in the Japanese yen has made Japan more attractive, or the opposite? How are you approaching that?
Yeah, people always look at the yen and the currency movements when investing in Japan. And again, it goes back for us to the fundamentals of the companies, or the companies that are exposed to any currency kind of extreme movements. But in general, again, that domestic demand story in Japan is recovering, somewhat ignored, but is recovering. And I think that's going to be very positive for growth going forward.
Catherine, thank you. Great to have you. Catherine Yuen there at Fidelity International joining us here in our studio.
All right, let's take it back here to Hong Kong. So the chief executive of the Hong Kong Exchange here says investors should focus on the longer-term outlook for the mainland here after President Xi Jinping's consolidation of power triggered some wild swings in markets. So we talked to Gucho Aguzin on the sidelines of Saudi Arabia's future investment initiative. Have a look.
We've seen particularly some of the tech names being impacted the most. And that was a reaction of like all the investors' questions around the future, around volatility around the world. Now, at the same time, I think it's important to see that the long term, and this we've seen from the GDP numbers that came out. I mean, GDP of 3.9% growth, it was a little bit better than expected, which, I mean, is precisely the point that we want to usually focus on, the long-term opportunity and, everything that's going on, the companies that are being created. So there's clearly different views in terms of like which way it's going to go, and investors are trying to understand what positions to take around that.
Hong Kong has started to take the first steps to reopening. I'm looking at the current breakdown. You kind of wonder whether that's enough to really get the economy back on an invigorating level of path for growth.
Yeah. Well, the COVID limitations, restrictions, at some point they'll go away. I mean, the question is when is the right time? Right now, the limitations are set to a minimum. There's a really large event next week that is going to take place with all financial leaders from around the world going to Hong Kong. So I'm actually quite excited about this opening phase that we're seeing in Hong Kong, because we do see that people have an interest in being there. Investors see this as their connectivity, bridge into China. So lots of excitement.
Well, maybe a window's opening up for issuers, for IPOs. Is that what you're hearing from clients in terms of a shift in sentiment, maybe accelerate some of the plans? Hey, let's go now.
Yeah. Well, third quarter, we had more than twice of the IPOs that we had in the first half. So when we look at the whole year, over 60 IPOs in the years, raised over $10 billion. So it's been, yes, a tough year. For Hong Kong, that is a tough year. However, we can see that increase. The pipeline is still good, about 140 companies that have applied and are waiting for markets to get a little more stable, more consolidated. And so it looks good in terms of the pipeline. And I agree with the comment that this may be a good opportunity to start thinking about what's next.
We had some dramatic events on the LME throughout this year. And the speculation is that still not enough has been done to regain investor confidence. Volumes are still very much low. What needs to be done here to win back some investor appetite, to get this back into the health and shape that it's famous for over the years?
Yeah. You're right. The LME has 145 years of history. It's a long history. I was actually there yesterday, and we launched our LME Week, which is a week where all metal producers and consumers from around the world, they get together. It's part of a tradition of how to trade. And we've seen a lot of vibrancy. I mean, it's interesting that coming from the vibrancy of all those metal producers, then all of a sudden coming here to Saudi Arabia, where you see all this vibrancy in this market and everything. There are things that we are analyzing. We have an independent review that is looking at what happened earlier this year. And based on that, we'll assess what are the best measures to take, and we'll go forward. There was an announcement yesterday about some adjustment to what we call LME passport that essentially gives a lot of sustainability data to the metals being traded in our exchange.
Do you think that the LME might be worth more under different ownership? Would you consider selling? Are you in any active discussions?
A lot of the manufacturers and producers of some of these base metals, they are in China. There is a natural fit in terms of the connectivity. And the key thing is, how do we get the most out of that advantage of being in uniquely positioned as HKEX, as part of China? I think that's what we have to focus on. How do we get that advantage into LME?
The Hong Kong Exchange CEO Nicholas Akuzin there speaking with our colleague Yusuf Gamal Adin in Riyadh. Let's get to Vonnie Quinn. She's in New York with your first word news. Hey, Vonnie.
Hey, Yvonne. Thank you. Australia warning of mounting debt and deficits in the years ahead, even as Treasurer Jim Chalmers held down spending in his first budget to avoid further fueling inflation. Treasury figures show the deficit will widen from 1.5% of GDP this fiscal year to 2% in 2025. That increase will be largely driven by higher spending on the nation's disability insurance program and rising borrowing costs. A study has found new bivalent booster shots from Moderna and Pfizer don't do any better than current vaccines in raising antibody levels against the dominant COVID strains. The research by Columbia University and the University of Michigan contrasts sharply with Pfizer and BioNTech's claim earlier this month of positive early data. The results still need to be confirmed in much larger studies. Former Pakistan Prime Minister Imran Khan says he plans to start a protest march to Islamabad on Friday, demanding early elections. Khan was ousted by a no-confidence vote in April, but is making a major push to return to power. Prime Minister Shehbaz Sharif's government says elections won't happen until late next year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Yvonne.
Well, coming out, Philippine power business ASEN wants to become Southeast Asia's largest renewables platform by 2025. The CEO, Eric Francia, joins us next to discuss their strategy. This is Bloomberg.
Right, welcome back to the shows here. Let's talk about energy, shall we? So as the world grapples with this crisis, you have elevated fuel prices, obviously compounding the supply situation in many countries here. Really against this backdrop of what you would imagine to be counter to that transition, you have Philippine conglomerate Ayala's listed energy group ASEN is actually looking to hasten and accelerate its transition to renewables. Let's discuss this with and more with the company's president and CEO joining us now out of Singapore, Eric Francia. Eric, good morning. Thanks for coming on the show. Hope it's okay to get straight to it.
David, Yvonne.
Your attributable capacity in terms of overall assets and portfolio, how large is that? Is that 4,000 megawatts, if I'm not mistaken? And how much of that is operational and how much of that is renewable? Sorry, go ahead.
That's correct, David. We're now currently at 4,000 megawatts in our portfolio, of which 87% or 3,500 megawatts is from renewable sources. And out of that 3,500 of renewables, we're currently operating 2,000 megawatts and currently building 1,500 megawatts, most of which will be operational within the next 12 or so months. We're present in Philippines, Vietnam, Indonesia, India, and Australia.
So 12 months. I'm just wondering, when it comes to this energy crisis that we're seeing globally, Eric, does that in any way speed up that transition for you, or actually does it hurt the progress?
No, absolutely, Yvonne. I think there's a silver lining in this current global energy crisis, given the elevated prices of fossil fuel, gas, oil, and coal. it presents a silver lining, an opportunity to really scale up and accelerate the transition into renewables. Renewables have become so competitive these days. I wish that I could say the same of battery storage. Unfortunately, the prices and the supply chain bottlenecks have impacted energy storage, but we believe that it will come back with its downward trend in terms of pricing. So over time, we still believe that energy storage can be scaled up to really unlock the potential of renewables. So there's a lot of work to do, and that's why we were bold and audacious in terms of communicating our recent 2030 aspiration of 20 gigawatts of renewables.
Right, and that takes me into, sorry, it's a very specific question, your coal plant there, and you're bringing forward the timetable to when you hopefully get that out of your portfolio, for the lack of a more diplomatic way of putting that. Is there a revenue hit, and what's that timetable?
Yes. Yeah, the timetable, David, is coal plants usually operate until up to 50 years, 40 to 50 years of technical life. We have committed. We just closed our first tranche. We announced that, disclosed that in the last 24 hours. The first 45% of that equity drawdown has been done, 3.2 billion pesos. We committed to operate our coal plant only until 2040, which is 25 years of operating life. So it avoids 15 to 25 years worth of emissions, which is approximately 50 million tons of avoided carbon emissions over 25 years. So it is inspired, this energy transition mechanism is inspired by this innovative concept being initiated by the Asian Development Bank. It's going to be the first in the world. We're excited about this. So basically, the proceeds from this transaction will go 100% will go into the renewable investments that we are making to support our 2030 vision of 20 gigawatts of renewables.
And which clean energies, which renewables do you actually prefer to meet the goals that you just laid out there? What's the kind of right mix in terms of the power portfolio?
Right now, we're heavily focused on solar and wind, both ground-mounted solar and onshore wind. But over time, we're currently beefing up our pipeline in terms of the derivatives of this technology. So we are building up a portfolio of floating solar as well as offshore wind. That's going to be the future because at some point we will head into land issues. We're not facing that yet, but we do expect that over the longer term we would have to use the water surface as well for both technologies. But of course, we need to complement this with energy storage, be it battery storage or pumped hydro. I think one of the key limitations in rolling out renewables is the transmission constraints, and energy storage is a critical way to address these transmission constraints.
Right, that's going to take money. I know you recently sold the green bond, so I think first congrats on nailing the timing on that. I think you did that while rates were at a window of opportune time, let's put it that way. Do you have any other plans to raise any money, whether that's green or sustainability-linked bonds, or even just the plain old-school bonds, corporate bonds?
Absolutely, David. We currently have a $3.5 billion of balance sheet. And to fulfill our 20 gigawatt renewable vision by 2030, we'll have to grow that balance sheet around 5x to about $16 billion. And that would obviously need a lot of funding. Now, the good news is we still have quite a low leverage ratio of only about 0.4 to 1. So a lot of the near to medium term growth will be fueled by increasing our leverage, including green bonds. There's tremendous demand despite the tightening liquidity in the market. There's still very strong demand, especially among the ESG-oriented investors. Our recent bond, as you alluded to, our maiden Philippine peso bond, 10 billion pesos, was 8.7 times oversubscribed, just to show you the strong demand for ESG-oriented investments. We're also one of the largest issuers of green bonds, US dollar green bonds in the region. We've issued $1.6 billion of US dollar green bond over the last 3 or so years. So we'll continue to tap both the US dollar and the Philippine peso green bond market, among other sources of funding.
All right. Mr. Francia, thank you so much for your time. Eric Francia there, President and CEO of ASIN, joining us live there out of Singapore.
And just sticking on the topic, our big take today, make sure to take a read on that one. This is how the climate change fueled heat waves, the droughts that we've been seeing have really dried out the rivers that feed giant hydropower plants as well. And that is shrinking the world's biggest source of clean energy. That is our big take for today. We got plenty more to come. This is Bloomberg. Yep, earnings in focus here. That dire warning from SK Hynix certainly is what we're watching out for. Let's bring in Stephen Ingles, our Chief North Asia correspondent, to walk us through what we heard so far from SK Hynix.
A lot of these chip makers are posting either production cuts and warnings about demand going forward, whether it's Micron or Kioxia, TSMC, Samsung. They've all given some sort of warnings because demand is really waning for chips that go into smartphones and also, of course, personal computers and other products across the manufacturing supply chain. And also there's the headwinds for Hynix, and in some of the statements that's coming from SK Hynix, they're mentioning the U.S. curbs on selling and doing business with Chinese fabs. And SK Hynix has a big fab in Wuxi, China. They've commented about it and essentially saying, they're thankful for a one-year moratorium on the restrictions for Korean makers. But again, after 1 year, it leaves a lot of uncertainty for a company like SK Hynix, which relies on the Chinese market considerably as well. So they're halving their capex for 2023. Their profit was down some 60% as well. Revenue and profit missing estimates.
And just very quickly, are these the same reasons facing Texas Instruments, for example, and why they're seeing also similar warning coming from?
Yeah, Texas Instruments stock was down considerably. They're warning as well. Keep in mind, they have a long list of semiconductor. They have, I think, the longest list of semiconductor clients. But again, 60% of their revenue comes from the automobile industry and chips that go into industrial equipment. So that indicates that this slowdown is across many different products.
All right, Stephen Ingles, our Chief North Asia correspondent there.
All right, your global macro movers actually seeing a bit of a rally here when it comes to stocks here. Hong Kong up some 1.3%. Dollar, though, still stronger against renminbi. We're punching 7.29 for your onshore rate, I should say. We got plenty more to come. This is Bloomberg.